because a lot of SMC trader unable to find the real imbalance and they mark wrong imbalance, and then they are looking for the buy and sell, and they are looking for to marking a PY, order flow, auto block everywhere, because everywhere need imbalance to marking a valid zone. So in this video I will cover all things in a detail, that how we can identify a valid proper imbalance in a higher time frame, in a lower time frame, during identifying PY, during identifying lower time frame. And so first of all, look at this diagram is here. Look at this one. First one diagram is here. Market are bearish condition, and when market is a bearish condition, then market create imbalance and unhealthy price action, and then market again to push higher to fill those imbalance before continuation. So in this example, look at this first candle high and low, both are here, because both candles high or low you have to must mark before to marking a valid imbalance. So this is a candle low, right? This one is our first candle, and this one is our second candle, and this one is our third candle, right? So how you can mark a valid proper imbalance? We have to mark first candle low, right, and third candle high. In a bearish market, this rule applicable in a bearish market. In a bullish market, this is just opposite, first candle high and third candle low, right? So now this is our bearish market. So look at this first candle is here. So in this candle, where is our low? The first candle low is here, right, and extend this one, and third candle high, which one is here, right? So what is this? This is proper imbalance, and this is our valid imbalance is here. So now again switch on the next candle. This one is our next candle is here, and you have to mark again this candle low is here, and third candle, which is our third candle, second and third. This is our MAC high is here. It means this is already mitigate here. There is no imbalance is here. Market already mitigate this one. Only one imbalance is here. Which one is here, right? It means market can be pushed downside, and then market again go higher, fill this imbalance, and then we can see some continuation to the downside, like break of structure, right, and inducement, and fill this imbalance, and market push downside like this. So this is our first scenario is here. And now move on the next scenario. Which one is here? Look at this diagram is here. This is our last bearish candle is here, and then what happened? Market trying to push higher and then push downside. So how we can identify where is our valid proper imbalance in this case? In this diagram you can see here, this is our last buying momentum before the stop. So you have to mark this candle low, which one is here, right? And some people mark this candle low, which one is here, and third candle high, which one is here, like this. So this is our valid imbalance right here. Okay, some people mark this one is our valid imbalance like this. This is the last buying momentum before the stop. So third candle low is here, right? As per this move, this is our third candle high, which one is here. There is no imbalance, right? Then what people do in this case, they mark this low is here, okay, and the next candle high, which one is here. I'm talking about third candle high, which one is here. So this is our proper imbalance is here, but this is not a valid imbalance. Why? Look at the left side. This is our last candle before this move, and again push downside, and this candle high low both are protected, means this candle high low not broken. And if market create anything between the high or low, those are internal move. So first of all, you have to check the previous candle high low where is here, right? So this is our previous candle high or low. So you have to mark this candle low is here, and third candle. Third candle means the next candle broken. Okay, so this is our second candle, and third candle low, sorry, third candle high, which one is here? It means this become our valid imbalance right here. This is a not imbalance. This is just the internal move. So market push downside, continue push downside, and again go higher to fill this imbalance, and then market push downside, create this imbalance. Okay, and a lot of people are waiting to fill this imbalance and to fill this order block, and they are looking for the sell, right? But this is not a valid imbalance. If market broken this low, which one is here, right? So where is imbalance? Now you have a mark, the imbalance is here. This candle low is here, and third candle high is here. So this has become our valid imbalance in this case, this one, right? Because the lowest candle is here, and market push higher, and this become our highest candle is here. It means this candle high and low both are protected, okay, because this candle not broken. So we can mark this candle low is here, and third candle high is here. So this become our valid imbalance. But you have to remember, this is our lowest candle right now, okay? If this candle not broken the previous candle low, it means this become our lowest candle is here. So this is our next possible scenario. And what happened if this candle high broken this previous candle high, where is here, right? So where is imbalance? Now you can see very simple, this candle low and third candle high, this become our valid imbalance, right? Okay, so I hope you understand that how you can mark a valid proper imbalance here. Okay, and same situation is here. The previous candle low is here, third candle high is here. So this is also minor imbalance is here. And imbalance basically used when you are marking the PY, marking order block, and looking for the entry, right, and looking for the order flow. Now I'm going to show you exactly on chart, then you can understand more better and more clear. So this is our 1 minute chart in a GBP USD. You can pick any time frame, and this will applicable in higher time frame, in a lower time frame, everywhere, right? So I'm just showing you example that how you can identify valid imbalance is here. So look at this top of the structure. What happened here? The previous structure was here, and previous structure taken out, and it means liquidity taken out. When market taken out the previous structure high and taken out the liquidity, then very highly chances market push downside. And when market push downside, you can take entry. This based on the direct order block, identifying the imbalance everywhere, right? You don't need to wait for taking out the inducement because market already taken out the liquidity. So generally we are selling after taking out the liquidity, after taking out the inducement. So same thing happen here. Previous structure high sweep, push downside and break this low, and this low act like our change of character because before this move market was bullish and now this become our valid change of character. After this change of character, what happened here? You have to mark where is our imbalance, where is our order block, right? Before to marking order block, you have to marking the where is our valid imbalance. So in this case, you can see where is our last buying momentum before this top. This is our highest candle is here, and you have to mark the highest candle low, which one is here, and third candle high, which one is here, right? It means this is our imbalance. Market mostly fill your order flow and then imbalance, and third is order block. Order block is a last stage, last unit to marking a zone when you are looking for the buy and sell. First is a order flow, and then next one is imbalance, and third one is a order block. But people are looking directly on order block, and sometimes what happen, market not fill your order block and market push downside, upside to fill to mitigate imbalance, right? So you have to mark this one is our imbalance, right? Market grab here and push downside, but market already mitigate this order block and push downside. Again, what happened here? Market push downside and then market create this order block is here, right? Market push downside and mitigate this order block, and this is our small time frame demand zone, right? And when market tap here and then gives you momentum to the upside but failed, so this is an indication that market not able to hold this demand zone and market create flip. Flip means when demand create a supply. So what happened here? Market took this low and then market create this order block is here. This is a mini order block is here, but you don't need to sell here. You have to always sell after taking out the inducement, after taking out the liquidity. So where is our inducement? This high, it means we can sell here after taking out this high. So after taking out this high, where is our unmitigated order block, and where is your order block, and where is your imbalance? So look at this one, everything is mitigated just above it. So where is our next unmitigated imbalance? Because this one is our highest candle and third candle high is here because we are in a bearish market. So this is our proper imbalance is here. Look at this one. This is a very interesting thing is here because sometimes you see market create this order block, not mitigate your order block, but market fill your imbalance, fill this imbalance and push downside. So sometimes you can miss this type of trade. So simply you can follow your imbalance to marking your POI, marking your entry criteria. Again, push downside, market this become our job change of character, and this is a lower time frame structure. Okay, in this case simply you can mark the normal structure also. Okay, so what happened here? Because price tap on your higher time frame POI is here, simply you can sell or buy after break of structure chalk. In this case you can also follow the simple structure, normal structure also, right? So this become our break of structure, push downside, and you have to mark again where is our next possible scenario, right? Market push downside, and where is our unmitigated order block, unmitigated imbalance and inducement, right? Generally when market push downside, then you have to mark your inducement before the sell. If market sweep the previous structure high or low, in that case you don't need to wait for inducement. So simply what happened here? Market continue pushing downside, something like this, right? Like this. So where is inducement? This high, first high is always inducement, and now you have to check where is our unmitigated order block, top of the structure to bottom of this structure. So this high act like our inducement, and you have to mark where is our unmitigated imbalance in this case. So this is our highest candle, and this is our highest candle low is here, and third candle high, which one is here? So this one is our imbalance right here. Okay, and just above it everything is mitigated here. It means very highly chances market can gives you reaction between this imbalance, and sometime your order block is also mitigated here, right? So it's all about probability, but most of the high probability to fill your imbalance and then market push downside. But if you are following the imbalance, then your risk reward will be little bit decreased, but when you are using order block, then your risk reward increase, right? But it's not all about the risk reward, it's all about to finding the valid POI, finding the valid imbalance, everything, right? So this is our next possible entry is here based on the imbalance, and this one is also next entry is here, and put the stop loss just above it, right? So these are two entry is here, right? And the third entry possible is here based on the imbalance. Okay, and after that what happened here? Market again push downside and break this low. When market break this low, you have to do again same thing is here. In this case you can see where is imbalance, where is our unmitigated imbalance, and where is our inducement. First of all you have to mark market again push downside, and this is the first pullback is here. This become our inducement, and after taking out the inducement you have to mark where is our unmitigated order block, imbalance, everything, right? Everything is mitigated here just above it. Okay, so only one order block is here. In this case you can see this is our highest candle is here, and some people mark this one is our last candle, and this is our order block, and this one is our imbalance, and they mark this is our order block. But in reality this is a not order block and this is a not imbalance. These are both invalid. Look at this one, look at this one. Where is our highest candle? In this case you can see this is our highest candle is here, right? So this highest candle low, where is this candle highest low? This one, and third candle high, this one, right? It means this is our proper imbalance is here. This is a not imbalance is here, right? This is a not imbalance because this imbalance already mitigate here driven by this move, right? So you have to mark this is our valid candle slow is here and third candle high H1 is here, because this is our highest candle before this drop, right? If this candle broken this one like this, so this become our valid imbalance, something like this, correct? But market not taken out this one, so this is our highest candle before this drop, so this is our imbalance proper is here. And if market tap here, then we can take risk for the enter, okay? But if you are willing to sell based on the order block, so where is order block in this case? This is our order block is here, right? This is our order block, but you have to mark your imbalance. So this is our imbalance right here, okay? That's right. So this is your imbalance is here, and you can sell here at this point. Again, what happen here? And put the stop loss just above it, and this is your entry criteria, and then put your target, and this become our valid setup as per our imbalance, right? And again market push downside because market tap something here and chop and tap on this order block and again push downside. So this process will be continued. I'm just showing you that how we can identify your imbalance in a higher time frame, in a lower time frame, everywhere you can mark to apply same process, same principle. So I hope you understand that how we can identify valid proper imbalance and what criteria you should follow before to marking a valid PY, valid order block, valid imbalance, because imbalance is a main key to identifying a PY, right? When you are able to identify valid imbalance, then you can identify your valid order flow, order block, PY everywhere, right? So I hope you understand, and you can simply backtest on your chart and simply you can rewatch this video if you are not able to understand thing. And thank you so much for watching the entire video. I will see you in the next video.